Hi and welcome back. In today's video, we're going to be talking about federal income taxes here in the United States. So let's get started. What is income tax? So income tax is a financial charge on all income generated by an individual and occasionally businesses in order to fund governmental and public services, such as infrastructure, thinking like the roads, bridges, welfare programs, and more. One thing to note is that you could potentially be subject to more than just federal income tax. It can depend on the state that you live in as well as the state you potentially work in. So for some individuals, their income is not only subject to federal tax, but also state tax, and in some locales, even local tax. For the purpose of this video, I am only focusing on federal income tax. How is income tax calculated? So the first step is determining how much of your income is actually taxable. So income can come from a variety of different ways. Some examples include wages, tips, dividends, interest, rental income, and self-employment income. Another thing is that not all of these income types are considered taxable in the same way. So after all of that income is added up, then your deductions and credits are put into place. What this can do is lower your taxable income, or in the case of a credit, it could lower actually what you owe in tax. I want you to know that your taxable income is not equal to your total income, nor is it equal to your adjusted gross income. So those are three different lines on your 1040. Your total income is line 9, your adjusted gross income is line 11, and then your taxable income is line 15. So now that you have what is your total taxable income, then you could take that amount and compare it to the current tax brackets to determine what bracket you are in and then how the income is going to be taxed amongst the lower brackets. What are tax brackets? So the United States uses what is called a progressive tax bracket system. Essentially, the tax rate increases based off of the income. So the higher the income, the higher the tax bracket you are in. And it can also depend on your tax filing status. So in general, a single payer is going to have lower income for each of the brackets. Joint filing married is going to have a higher income amongst the same brackets. And then the head of household is going to have a mix between the two. So if you don't know what I'm talking about when it comes to tax filing statuses, check out this video. As of right now, there are 7 tax brackets, and until 2025, these are the tax rates associated with those 7 tax brackets: 10%, 12%, 22%, 24%, 32%, 35%, and finally 37%. Again, these are the tax rates until 2025. Another thing to note is that the income range for each of these tax brackets does change on a yearly basis. So in general, because of inflation, the amount of income per bracket goes up each year. What does that mean? That the income range from 2023 is lower than the income range for 2024. Another key part and what makes it progressive is that your income is not taxed at the highest rate that it is at. So if you fall within a 24% tax bracket, you're not getting 24% of your entirety taxable income. Essentially, what you are doing is you are paying the max amount of tax per the amount in each bracket. So in interest of keeping this video as evergreen as I possibly can, I'm just noting right now that the table I'm going to be putting on the screen is an example. So it is going to follow the 7 tax brackets, but the income ranges are going to be completely falsified. So this is just an example. All right, so on the screen, you're going to see the 7 tax brackets, and then you're also going to see the income bracket if you are a single status filer or if you are a joint filer. 10% for the income of a single person, it is $10,100 or less, and then for a joint person, it is $20,200 or less, and it's going to go all the way down. So we're going to do 2 examples. We're going to have both examples have the same amount of taxable income, so it's going to be $81,000, but one is going to be filing single, and the other is going to be filing married joint. All right, when we take into account the taxable income of a single filer is $81,000, then in this case, they fall in the 24% tax bracket because $81,000 is below the threshold of $99,000, which is that 24% bracket. It is, however, greater than $76,000, so that means they are not in the 22% bracket, they're actually in the 24% bracket. So the first $10,099.99 of that $81,000 is subject to being taxed at 10%, which is $1,009.99. Then the income from $10,100 to $38,999.99 is going to be subject to 12%. The difference in income from that amount is $28,999. That being taxed at 12% is $3,468.12. Now we're going to do the same with the income difference between $39,000 and $75,999.99. So that difference is $36,999.99, and 22% of that is going to be $8,140. And then finally, we hit the highest bracket for this filer, which is 24%. So that's going to be the difference from the $76,000 and their $81,000, which is $5,000. And at a rate of 24%, it's going to be $1,200. So now that we add up these amounts we got from each bracket, that's how we come up with the income tax liability. $1,009.99 plus $3,468.12 plus $8,140 plus $1,200 is going to equal a total of $13,908.11. One thing to note is that when you are doing these tax filing forms, the IRS likes to hold you accountable and have you round your numbers. So in this case, it's going to round to $13,908. Just for your peace of mind, what the rounding rules are is anything under 50 cents is the dollar below, and then anything over 50 cents is going to be a dollar above. So let's say it was $13,908.55, then your total tax liability will be $13,909. But in this example, it's at 11 cents, so it goes rounding down to that $13,908. So now we're going to look at this example if it was for a joint filer. So in this case, a joint filer would actually not be in the 24% bracket, but they would actually be in the 22% bracket. For the 10% bracket, the total amount of income tied to that is $20,199.99. So the tax liability rounded up is going to be $220. Then the income subject to 12% is a difference from $20,200 and $77,999.99, which comes out to $57,799.99, and 12% of that rounded is going to be $69.36. Now, since $81,000 is lower than $152,000, the final portion of this income is going to be taxed at 22%. In this case, the difference between $78,000 and $81,000 is $3,000, and that amount is going to be taxed at 22%, and that comes out to $660. So the income tax liability for this is $2,020 plus $9,936 plus $660, which comes out to $9,616. Now, I want to demonstrate for you that in both cases, they paid less than if they were taxed at the tax bracket rate for the entirety of the income. Again, this is why it's called a progressive tax system. For the single filer, if they were flatly taxed at 24%, then the amount of taxes that they would have owed would have been $19,440. And for the joint filer at 22%, then it would have been $17,820. What is the marginal tax rate? So simply stated, this is the highest tax bracket that you are in. Essentially, it is whatever the last dollar of your income is taxed at. But again, it's a progressive tax system, so you are not actually paying that marginal tax rate for the entirety of your income. In the example that we had on the screen before, for the joint filer, they were at a marginal tax rate of 22%, and then for the single filer, they were at a marginal tax rate of 24%. What is the average tax rate? So basically what you do is you take the total tax amount that was owed, and then you divide it by your total taxable income, and then multiply that by 100 to turn it into a percentage. Sometimes the average tax rate is also called the effective tax rate. So in the example that we had before, the single filer's average tax rate or effective tax rate is going to be, just really quickly, I'm going to put it on the screen so you can see the math too. It's just easier to see the numbers. So 13,908 divided by 81,000 and then times by 100 is going to come out to 17.17%. And for the joint filer, $9,616 divided by 81,000 is going to come out to a tax rate of 11.87%. How is income tax paid? Well, if you are an employee, then essentially your employer is responsible for sending the tax payments on your behalf to the government. If you are not an employee and are receiving income either through rental activities, 1099, contract work, you're a gig worker, etc., then you are going to be responsible for paying it yourself. Understand that these tax payments are made on a quarterly basis, and for your help, here is a video which talks about quarterly taxes. So there you have it. That's the basics around federal income tax and the progressive tax brackets. Again, the examples that I used were fake numbers, but you can just Google it yourself to find out what the income ranges are for each of the brackets, as well as the difference for single, joint, head of household, etc. When it comes to taxes, like in all my previous tax videos, I'm going to say, please consult a tax professional in order to get specifics on your situation. There are benefits to doing things different ways, and I don't know your personal information, and I'm also not a tax professional, so I'm not giving you any sort of advice. This is just general information, so that way you come in to going and sitting at your tax appointment and having a better idea of what you are actually filling out, because everyone knows you're supposed to file taxes on a yearly basis, but not a lot of people understand how that works, and hopefully this video helps you out. As always, thank you so much for tuning in. If you're new to this channel, hi, I'm Rebecca Bautista, and I post videos that do breakdowns like this, but I also talk about my personal finance. And if that is something of interest, consider subscribing. For those of you who are subscribers, thank you for tuning in again. I appreciate it. And as always, do me a favor, let me know in the comments below if you have any questions or if there's a video or a topic you want me to cover, because I am here to make videos for you. So until the next video, I hope you have a good one. Bye!